Hello and welcome to Bazaar Morning Call, live from the CNBC-TV18 Motilal Oswal studios. I am Prashant. With me, my colleagues Sonia and Nigel, as always. Guys, hi. Good morning.
Morning.
It's color coordinated today, right?
In the pink of health.
Pink of health, yeah, I wanted to go for that.
And as you were saying, if I got a pink tie, I think it'll be...
But I guess, that's only will look cheerful, right? On a Monday morning when you have so much news flow hitting you, there's so many events coming through this week and you have your work cut out.
Yeah.
You just got to cheer yourself up with a little bit of color.
Absolutely. And I think, I'll tell you guys, I don't think we've had a market opening which is so keenly awaited in the last... it's not happened since maybe the last 2 years or something of that sort, right? Everybody is eyeing 9:15 in terms of what's going to happen.
And I think no one on the street knows which way it's going to go, right?
Yeah, no, that's the other thing, right? I mean, views are so sharply divided in terms of where this should go. And, what we'll do is over the next 60 minutes or so into the run-up, we'll try and kind of get you lots of views, opinion in terms of how things are set up. The fall over the last 2 days, especially Thursday and Friday, has been brutal. I think the SGX Nifty is okay, 35 points, but I don't think that'll matter much because we'll only know at 9:15 which way the wind is blowing today at least. So the last 3 days, and the change should come up on your screen. The fall happened on Thursday and Friday, but what I've done is I've taken the highs on Tuesday morning. Wednesday, I think, was a market holiday, and taken the drop from there. The Nifty is down 3%. Banks have taken a complete sort of knock on the chin, 6.5%, and the mid and the small cap part of the market is also down about 3.5%. Friday seemed like almost capitulation. There was fear, there was panic, and of course, it all kind of started with the big drops that we saw across the board in the Adani Group stocks, and then that fear spread through the rest of the market in a pretty significant way, I would say. So I think there is so much going on. We can do a 1-hour program basically trying to describe all that is happening on this particular issue. The Hindenburg report, the response. Yesterday evening, the Adani Group came out with a sort of 400+ page report in reply to the Hindenburg report. 55 pages of clarification, and of course a lot of annexures, documents, etc. So we can do all of that, but I think what matters for the market straight up over the next 2 days is basically the progress on the Adani Enterprises FPO. I'm talking about the very near term. What matters is will the FPO get done, right? And I think we'll get you updates on this as well as we go along. The Adani Group is very confident that the FPO will indeed go through. The mechanics of it, how it will go through, because there is a significant difference between the price in the market and of course the FPO price. That is something we need to wait and watch. I think there are enough out there who are still skeptical in terms of that confidence which has been expressed by the Adani Group in terms of how will this get done. So this is something which I think in the very near term is absolutely important. It will show confidence in the group, the ability to get this done. And of course, I think it is important for stock prices as well. Stability in the group stocks, potential stability in the group stocks should also potentially bring some stability in the broader market. And I think that is, in a way, the single most important dominating driver as we start a new week, start a new trading session as well. So that's the Adani sort of impact one way or the other. What this has done is it's also basically brought Nifty to very, very crucial levels. The fall that we saw on Friday. There is a cluster of supports around the 17,500 mark on the Nifty. And why am I saying that? What is that cluster? The 200 weekly moving average is at 17,550. There is also the 61.8% retracement of the rise from the October 22 lows to the all-time highs, which stands around the 17,550 mark. So 17,500, 17,550, I think, is the critical kind of a level to watch out for. We breached that intraday and then closed above it. So that's point number one. The low on Friday is 17,493, roundabout, 17,500 broadly. If you break that, then you have supports coming in only around 17,200 or so. That is the 78.6% retracement of the full rise that we saw from September-October lows to the all-time highs of 18,887. On the upside, if the market starts to bounce up a little bit, 17,761, which has acted as a support which got broken on Thursday, I think that becomes a resistance as we move forward. On the banks, I mean, the bank nifty, it closed below the lows of 41,569, and the next support comes in at the 61.8% retracement, which stands at 39,970 levels. So these are some levels, near-term levels to watch out for as we start another fresh day of trade. But I just want to make a quick mention of the global markets, right? I'm just kind of, I started with India because I think what's happening here is very much India focused, but global markets are trading like it is 2020. I mean, US markets, for example, they've scored their 4th straight strong Friday, the Friday session. And why am I saying they're trading like it's 2020? Bitcoin is rallying. A lot of the weaker spaces in the NASDAQ, tech stocks are rallying 30-40%. Tesla, which tumbled in 2022, that is up 65% in the last 3 weeks or so. So the global sentiment is pretty buoyant, and it is based on the bet that maybe inflation is starting to come under control in a big way. And to that end, we did get inflation numbers. The core PCE index in the US was released on Friday. On an annualized basis, the 12-month annualized inflation rate in the US, according to this, is now 4.4% in December. This number was 4.7 in November and 5.1 in October. So inflation is coming off in the US. And if that was the big macro problem of 22, I mean, the markets are betting that, you know, it's going to be in the rearview mirror and not in front of us. So global sentiment is buoyant. It's a big week. There is this local issue which we need to deal with. And of course, later as we go ahead, there is the big event of the union budget as well. So promises to be an exciting and of course, a much awaited one. Guys, hi.
I love how you ended it with the union budget, right? I mean, generally, historically, you start by saying that this is the union budget week, and that definitely is the biggest cue. But I take your point. I mean, there's so much happening around this whole Adani issue and the rebuttal that has come through. Let's see what happens. At least the SGX Nifty is indicating that the start will be flattish. There is some caution going into really big events that we have this week. Not just the union budget, which is on Wednesday. You have the 2-day FOMC meeting that begins, that starts on the 31st of Jan. That's tomorrow. You'll get the outcome as well. And there is a 25 basis points rate hike expected. So there's caution ahead of that. There are a lot of large cap earnings. There, Nifty earnings coming through this week. Starting today, where you have L&T, there's BPCL, there's Bajaj Finserv, there's Tech Mahindra. Then on the 1st of Feb, there's Britannia, HDFC, Titan, ITC. The list is pretty long. So you have a lot of local cues to reckon with as well. Now, in the numbers that have already come through, there's Bajaj Finance, which look pretty decent actually. The AUM growth came in at 27%. The asset quality has improved, and that perhaps is something that the street will negotiate on the upside as well. Now, for the market, we are at a 3-month low, so let's not forget that. And there was large selling by FIs on Friday. FIs sold almost 6,000 crores, and put together, it's almost 30,000 crores that's sold by the FIs in January. So the bulls are definitely on the back foot as we head into trade. And the clarification that has come in from the Adani Group, and we'll of course talk more about that. There's not only a clarification from the Adani Group, but from large banks as well. So post-market hours on Friday, SBI as well issued a statement where they said that the exposure to the Adani Group is well below the large exposure framework, and the Adani Group's debt to EBITDA has improved and helped the group service its obligations comfortably. So all these clarifications could perhaps lead to some recovery in the stocks and aid the market. So the big question is, of course, Prashant did speak about a lot of levels, but the 17,300 mark thereabouts is the 200-day moving average on the index. Will the Nifty find support at those levels? Perhaps it could, given the clarifications that have come through and some positive data as well. But then again, there are big events lined up, so perhaps there could be some caution as we head into trade this week.
Well, that's right. Sonia, the markets would be looking at the two events, the Fed and Union Bank budget, and suddenly, this Adani issue comes out of syllabus, right? And the hope is that all three of them go according to plan. Now, in Friday's trading session, I was feeling, in cricketing parlance, a little like Rahul Dravid. You need to stay in there, toil it out. It's going to be a difficult trading session. Today, however, I think a glimpse of Virendra Sehwag needs to come in, particularly if the market moves lower. And I say that because the last couple of sessions have been very, very rough. The Nifty Bank losing 5.5% on. And the reason I say that maybe we'll see a bit of a relief rally, how fierce can it be and how much higher can we go? Well, that's a question mark. But when the PCR comes down to around 0.7 and when you have the short positioning coming down, the FI short positions move all the way to around 75%, that normally, sparks a bit of a short covering bounce. Let's see whether it happens this time around as well. And just take a look at it. On Friday's trading session, the FI has added 27,000 short contracts. They unwound some longs, which takes the short positioning up to around 75%. The problem is at higher levels, you'll see some bit of resistance because the way they were writing calls, close to 2 lakh calls were written, way more calls written than puts. And the options data, there were two trends that were clear. One was the call writing, 18,000, 17,800 call, very, very aggressive. And if things go wrong, suddenly these lower puts were open up because, there is some kind of cushion that the market experts were building. In case things go wrong, after a while, we saw quite a bit of put buying as well. What are the levels to track then? The Friday's low is very, very crucial, both on the Nifty and the Nifty Bank. So if you want to, try a bit of a punt, then closer to around Friday's low is going to be rather important. If we break that, then we slide to around the 200 DMA. And keep in mind, the recent support becomes a bit of a resistance. So we can brace for a bit of a bounce. However, at higher levels, those are the crucial levels, 17,750, 17,760 odd mark. I think maybe, in fact, the PCR moving to around 0.7 odd and the FI short positionings, maybe a bit of a relief is on the cards.
Okay, since you mentioned cricketing parlance, we must take a moment to congratulate the women, right? In the under 19 T20 World Cup. They're winners, so congratulations there. And it's also the first time the women's cricket team has won any World Cup.
Yes.
So I'm so glad they're getting this kind of limelight and this kind of footage, because I guess women's cricket hasn't received the kind of mileage that perhaps men's cricket has. But now things are picking up.
Oh, absolutely. Things are picking up, and wishing the team many more successes going forward as well. So those are jubilant pictures which deserve to be celebrated as we will through the course of the day. Well, let's move on and let's get this going in terms of telling you what's lined up here in the first half hour of the show. We will get you updates from markets across the globe. Abhilash Narayan of Standard Chartered Bank will join us to discuss the global trade setup. Later, our research team will bring you the CNBC-TV18's list of top 10 stocks for the day. At 8:30, we get you the big and highly anticipated interview with the Adani Group Chief Financial Officer. And that is the lineup that we will begin the day with. As I said, it's power-packed and keenly awaited.
Okay, you'd want to wait and watch for that interview that happens at 8:30 a.m. Lots of clarifications coming through and perhaps could be market moving as well. So do stay tuned in for that. On the equities front though, first up we have a comment coming in from Chetan Seth of Nomura, who says that unless there is a hawkish surprise from the Fed and or the labor data surprises on the downside, the market sentiment will likely remain buoyant for now. Nonetheless, he says if the US jobs data does eventually weaken in the months ahead, as their US team expects, he thinks this could be a source of volatility for stocks. However, he maintains his view that such volatility induced by weakening US economy and stocks is an opportunity to raise exposure to Asian stocks.
Well, let's get you some money market views as well. Kunal Sodani of Shirin Bank says that the US core PCE, the Fed's preferred gauge of inflation, is edged down, strengthening expectations of a smaller rate hike by the Fed. He says the ECB continues to remain firm on aggressive rate hikes, says the dollar index has an important support at 101.3. For the dollar INR pair, he says 81.4 to a dollar acts as a support, while 81.9 to a dollar is a resistance.
All right, and on the bonds, Ajay Magnolia of JM Financial says the fear of higher than expected borrowing number in the budget is keeping traders cautious. He says there is no fresh trigger as such besides lower inflation and direction for further hikes or pause in policy rates. He says global markets and crude also await further direction and expects the 10-year benchmark bond yield to trade in a range of 7.37 to 7.43% for the day.
Well, we have plenty of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. We'll look at Bajaj Finance, Vedanta, NTPC, Data Patterns, Vedant Fashions, NMDC, as well as Godfrey Phillips. They are stocks on the back of positive news flow. On the flip side, you have BEL, Kajara Sedmix, and Aarti Drugs. They are stocks that could react to negative news flow.
Okay, well, Abhilash Narayan is joining our Senior Investment Strategist, Group Wealth Management at Standard Chartered Bank. Abhilash, good to have you with us here. Thanks very much. I can tell you that here in India, no one really cares about the Fed, at least not this week, although you have the FOMC meeting lined up. And of course, that is only temporary because of what's going on here locally, Abhilash. But the market action in the US, right? The NASDAQ is rallying on big retail stocks like Tesla are bouncing back strongly. Bitcoin is up very sharply. This is a bit of a risk-on phase. Will this last? Your opinion?
Well, on our end, we just published a report on Friday, and we think that markets are getting a bit complacent in terms of, expectations of a more dovish Fed and the rally we've seen in equity stocks. Because, while the earnings season that we have seen in US till now has been, surprising modestly on the positive side, earnings are still expected to contract in Q4. And in the coming week, we are going to see a fair number of tech earnings. And in Q4, we are expecting the tech sector to show earnings drop of around 8%. When you combine that with the Fed, and we think that the Fed will be more hawkish than what the market is expecting right now, we see that there is a realistic risk of a consolidation or even a pullback in the global risk sentiment. So we would recommend locking in some of the recent gains for some of the US and European equity exposures, which have rallied quite sharply in the past few weeks.
Abhilash, good morning. Is there any specific expectation from the budget this time around? This is the last budget before the elections, so there is an expectation that it could be a populist one in that context. From an investment standpoint, what are you going with?
Well, you guys are probably following the budget more closely, but from our perspective, we think that the budget will still be supportive of growth. It will still be expansionary. The fiscal deficit is likely to be lower than what we saw in the past year, but it's still going to be, elevated from historical perspectives. If I look at, the potential for impact on bond markets, we think that, the borrowings will decline from last year, and that should mean that 10-year Indian government bond yields should see the yields capped somewhere between 7.5 to 7.75%. When we combine that with our view that we expect RBI to only hike rates by 25 basis points, we think that this is a good time to start allocating more to bonds, because that could play out to be a good investment in the medium term.
Money drifting towards bonds. Morning, Abhilash. What about the toss-up between India and China? Some part of that has played out because the Chinese index has done well. In the recent past, we have underperformed. What's your view on the Indian markets in comparison to what the Chinese markets have done now?
Well, when we talked in December, just before the new year started, I had highlighted that we had turned from overweight to neutral Indian stocks, and we had turned overweight Chinese stocks because we expected, investors to reallocate money to Chinese equities, especially international investors, given the reopening expectations. And that's, certainly played out. And we have seen that in flows data as well. Now, in the near term, obviously, the concerns around Adani Group are going to be an excuse for investors looking to sort of take profit on the profitable investment in Indian equities over the past couple of years. So that could be a headwind. But if we talk specifically around China, obviously we've got the important Caixin PMI data scheduled to be released this week, and the industrial profits. So that data will be crucial. But for the next 3 to 6 months, we think that Indian equities could continue to lag Chinese equities given the high PE ratios and the general bullish sentiment towards China. But on a 12-month horizon, we are still neutral on Indian equities.
Okay, so you're saying that Indian equities could lag Chinese equities, and you believe that the money will be made in the bond market now. So are you trying to, advise investors to perhaps raise their cash levels, move out of equities into other asset classes? What should the asset allocation strategy be for the rest of the year?
Well, absolutely. So, at start of the year, we turned neutral on Indian equities relative to Indian bonds. And even within equities, we do have a tilt towards defensive sectors and sectors which are, scheduled to benefit from government spending in general. And one of the key reasons for that is, regardless of what's going on in India, and we do expect a strong growth in Indian economy, we think that global economy will weigh on the broader stock markets, and we are assigning a 75% probability of recession in both US and Europe over the next 12 months. And that could be a dampener for equity markets globally. So we think that it makes sense to turn a bit more defensive, increase allocation to bonds, especially given the attractive bond yields right now, and raise allocation to cash to a sort of neutral level, so that if you do see any sharp pullbacks, investors do have dry powder to use that cash and enter markets at a better level.
Okay, that's a fair point. Thanks a lot, Abhilash, for joining in and giving us your view. So that's a slightly circumspect view on the equity markets. There is a global recession coming. Perhaps better to keep your powder dry in a situation like this. Let's slip into a quick break. Lots coming up. There is that big Adani Group interview as well lined up at 8:30. So don't miss out on that. And our list of top 10 stocks lined up from our entire research team in a bit. Welcome back. It's a big day of trade lined up. It's in fact one of the biggest weeks, if not the biggest week for financial markets, as we have the union budget coming up. It's the penultimate day before the big budget, so lots to reckon with. The SGX Nifty is going into the budget and going into the the Adani Group clarification very, very quiet. So let's see which way it goes. But a lot of stocks to react to their earnings today. So let's get straight down to that. Good set of numbers coming in from Bajaj Finance. Abhishek has the latest. Abhishek, over to you.
Well, Sonia, it's an inline quarter for Bajaj Finance. The new loans is at all-time high of 78.5 lakh, up about 16% on a sequential basis. The AUM mix shows that they are slowing down in the mortgage portfolio. However, consumer, SME and commercial still continue to drive the loan growth on a robust basis. So calculation shows that net interest margin have expanded on a sequential basis, but it's down on a YOY basis. Gross NPA, that is under control, coming in at 1.14%. when compared to 1.17% in the previous quarter, and restructured book is at a mere 8 basis point of the loans versus 10 basis point in the previous quarter. Return ratios, they remain healthy and they continue to improve both YOY and quarter-on-quarter, and PNL, both the NI and PAT largely in line with our estimates. Back to you.
All right, thanks a lot for that, Abhishek. Well, Vedanta is the other stock that will be reacting to its numbers, and if you look at the numbers in comparison to our poll, well, it looked better. Keep in mind that Hindustan Zinc's numbers are already the price across around 35-40% of the EBITDA number was already known. But in terms of the numbers, it look good. A couple of observations out there. Normally, you look at the segmental breakup between the aluminium, the oil as par in International Zinc. And on almost all those businesses, it looked much better than what we were working with. A couple of observations, though. In the oil and gas business, it looks like a big beat. However, the beat is to the tune of close to around 200 crores. And I say that because the windfall tax of around 330 crores, it was taken as an exceptional item. The other two factors were they declared a dividend yet again of 12.5 rupees. Year to date, the dividend goes to around 81 rupees odd. And on expected line, since they're paying out more dividend, the debt number moves up as well, going with a tinge of green on Vedanta. But Vivek's back with us to tell us about NTPC. Vivek, how are those numbers?
Well, good morning. It's a very strong operational quarter from NTPC this time around. It's an operational beat. Both demand as well as generation growth was quite strong on a year-on-year basis and even sequentially. And, quite heartening was the fact that there's been a strong improvement as far as the JVs, the joint ventures that the company was operating with. Now, better realization in terms of the pricing and also lower fuel costs is something that has actually gone ahead and aided the operational beat. Now, focus now mainly shifts to the consummation of the renewable deals platform. Remember, the management already told us earlier that they're looking to consummate this particular deal by the end of March 2023, looking to offload almost 10 to 20% stake in that particular platform. Looking at the core numbers, across all of the parameters, it's a beat to the CNBC-TV18 poll. Standalone revenues up almost 37%, profitability up 5.5%, EBITDA up 36%, and margins quite strong at 32% on a year-on-year basis. One important update, the Joshimath project work has now been stopped, and the next date of the court hearing is May 2023, is what the management indicated in the con call.
Okay, thanks a lot for that. So we'll keep an eye out on all of those stocks. But there are some more smaller, names that could be in focus. Kajaria Ceramics is something that Mangalam is looking at. He's also tracking Godfrey Phillips. Mangalam, good morning.
Good morning. So poor numbers coming in from Kajaria Ceramics. Asian Paints numbers told you that, this time around there will be weakness for all the home improvement names. And it starts from the top line itself. A 2% growth in the revenue, just a 1% decline in their volumes. Led to an EBITDA decline of almost 28 odd percent. Margins compressed by 500 basis points because higher power and fuel costs did not aid their cause. And as a result of which, the net profit fell by 41%. See red on Kajaria Ceramics. As far as Godfrey Phillips is concerned, the tobacco business of the company did well. In fact, we did see a margin improvement out there as well. But importantly, their other income also, which was on account of them having sold their chewing tobacco business, led to a 35 crore exceptional gain, as a result of which the net profit came in at around 78 crores versus 27 odd crores. So good numbers coming in from Godfrey, poor numbers coming in from Kajaria.
Okay, all right. Thanks a lot for that, Mangalam. Well, Vahista joins us to tell us about BEL and data patterns. Morning, Vahista.
Good morning, Nigel. Well, I'm going to be talking about the defense pack, and Bharat Electronics has reported numbers which are more or less not match the estimates. In fact, only the revenue, which is coming at 4,100 crores, is exactly bang on the CNBC-TV18 poll. There was a healthy execution of the order book, which led to a 12% year-on-year jump in their revenues. But what has been worrisome has been the decline in margins. The estimations were at 21.9%, but the actuals have come in at 20.7%. So that is something that the street will look for. The order book, as on the 1st of January, is at 50,100 crores. And the management had earlier guided us for a FY23 year-end order book of 60,000 crores. So I'm going with a red on the stock for today. But there's another stock which I'm looking at and has posted some excellent set of numbers. Also from the defense pack has been Data Patterns. There's been some really good numbers coming. In fact, the current order book is at 890 crores and they're expecting additional 125 to 150 crores of orders in the ongoing quarter, that is Q4. There's a new manufacturing facility which is also expected to commence in Q4. The revenues have jumped 155% on year-on-year basis. The margins have come in at 42% in this quarter versus 36.4% in the same quarter of last year. And the PAT has also jumped by nearly 250%. But what we'll be looking forward to is that earlier the management had told us that they're looking for 25 to 30% growth in the revenue growth, which is something we will be looking for, whether they can achieve that target or not. Also on the margin front, they were expecting upwards of 40%, but in 9 months, the margins have been approximately 36, 37%. So that is something that we'll be looking forward to. The management is coming on air in the next 1 hour or so. Back to you.
Okay, thanks a lot for that. Very good numbers from Data Patterns, and their manufacturing capacity is also going to be doubled Q3 onwards. So we'll of course get more details on that, but going with green there. But Ekta is joining in. She has Aarti Drugs and Vedant Fashions on her radar. Ekta, over to you.
Thanks for that. I'll start with Vedant Fashions. Revenue up around 15%. Margins have been maintained. Profit up around 17%. Same-store sales growth, however, is down 8.7% year-on-year. They expect a better Q4 because of the wedding season picking up. Aarti Drugs, I expect that stock to probably be in the red. Revenue up 5%. Margins lower year-on-year. Profit at 36.68 crores compares to 58.3 crores year-on-year. Q-on-Q, revenue lower, margins have been maintained, but profit is marginally lower as well. So overall, a bit of a sluggish quarter. Expect Aarti Drugs to probably be in the red. But just remember that the company is looking to double its capacity in the specialty chemicals business. So watch out for that.
All right, Ekta, thanks a lot for that. I'm watching NMDC. At the start of January, they had increased prices, and over the weekend, they have high prices yet again. That's source-based information from Steel Mint. We have not yet verified this, but the writing was on the wall because Odisha miners had increased prices. Global iron ore prices looked good. Pellet prices have been moving up. So those explain the whole host of factors that led to this price increase. Expect NMDC to open up in the green.
All right, Nigel, so those are the list of stocks that we are watching out for. Now on to the big story. Shares of the Adani Group nosedived after a report by Hindenburg Research revealed short positions and flagged multiple risks. The rout has wiped out 4.2 lakh crore rupees from the group's market capitalization in the last 2 trading sessions. Shares of Adani Enterprises, which kicked off its follow-on public offer, slumped more than 18%, and now it's below the follow-on public offer price of 3,112 a share. Meanwhile, the Adani Group issued a fresh statement saying Hindenburg's conduct is calculated securities fraud under applicable law. To clarify and address all issues regarding the Hindenburg report, FPO, SEBI probe and lots more, we are now joined by Jugeshender Singh, Group CFO, Adani Enterprises. So thanks very much for joining us. Good to have you with us here on CNBC TV 18. I want to start with, of course, what is top of minds for everyone. How confident are you that the FPO will sail through?
Yes, so if you recall on the 25th, when we opened our anchor book, that was over 1.5 times subscribed. And then that was on Wednesday, and then on Thursday, this report dropped. And so there was this issue in terms of the volatility in the market. So where the subscription amounts were a little bit less, and as you correctly report. But we are confident that on the institutional side, that the entire issue is from based on our discussion, roadshow meetings, etc., will be fully subscribed. And that's why we clarified the rumors were going on. So we clarified on Saturday night that that the FPO will proceed on current pricing and on the current timelines. So we are supremely confident that from an institutional perspective, we are there, but there will be some pullback in the retail given such pricing differential and the volatility.
Would there be any change in FPO pricing? I mean, there is a significant difference between the current market price and the pricing of the FPO itself, right? So logically, the question is, why would anybody put in money there and not buy it from the open market? So if you're so confident this will go through, will there be change in pricing?
Yes, we will be, it's the same issue. FPO will go ahead on the same conditions that we launched.
Okay, got that. Mr. Singh, but do bankers need to underwrite the issue?
We didn't need that, so we didn't never ask for it. We were always confident of the subscription, especially on the institutional side. We also had a huge amount of, as you know, we do. We're one of the few corporates who does domestic roadshows, so we are always very comfortable that there was a huge amount of domestic demand, and that was true till this volatility point. That there were nearly 40 lakh applications went out, and so I'm privy to that. But that was never an issue for us in terms of the demand, and we did that analysis last year, and that's why we could announce that we will do 20,000 crore, India's largest private FPO. So that underwriting question never came up in our thinking.
Okay, so for the people who are putting money in this FPO, how would this price difference work?
That's a very good question, because actually, I'm glad that our questioning is going into this element, because this goes to the heart of how we look at Adani Enterprise. See, in Adani Enterprise, if you look at how somebody ascribes value, the value is not like because earnings and it's P or that. The value of Adani Enterprise is its capacity to incubate good quality businesses. So the underlying value of Adani Enterprise is, what is the value of Adani Airports? What's the value of Adani New Industries, which is a green hydrogen ecosystem? What's the value of Adani Roads, Adani data center business, Wilmar, mining services, materials and metals? So that, even with this share price volatility, the value of those businesses have not changed. So when you're a long-term strategic investor or institutional investors, what you are saying is that, okay, they are looking at the fact, and we ourselves also look at it this way, is that, let's say I own 100 shares of Adani Enterprise. Then I know I will get 100 shares of, or in that proportion, I'll get my shares in airport business, in green hydrogen business, in data center. Now, those businesses anyways, as we have flagged in our roadshow, they will be coming to market somewhere in 2025 to 2028. So their value is nothing to do with today. And that value stays. So an institutional investor is looking at what number of shares they want to have. Okay, now value becomes important. But when you're looking at a long-term intergenerational investment, this value is less important than what value the airport will be or what value the green hydrogen business will be. The entire story is correct, and the entire story is intact, and the execution capability is what people are betting on. And the execution capability of the group to execute large projects consistently over the last 30 years, people have seen. And so that's why they are comfortable that, okay, they understand that, okay, you could go to, but an institutional player also wants some substantial percentage. Could be 0.2%. That is difficult to acquire in the market, because then the price will again go up. So you're back to square one. So if there's that level of buying. So for them, it's just a temporary issue because the underlying value remains intact. And that's what would be understood as well.
Mr. Singh, has there been any communication between Adani Group with regards to clarifications that MSCI, which runs global indices, that they want? Has there been any back and forth? Have they asked you for anything? Can you confirm?
No, MSCI not reached out. They reach out to stakeholders. They do their normal work. We expect them to complete their work. We expect that over a period of time, this is a continuation of a process that they go through if there's a level of volatility. We expect that to conclude, but that's MSCI's position as to what they do. We believe that now that we have circulated our full, comprehensive, multi-100-page response to the report, which clearly establishes with documentary evidence that report is just full of misrepresentations, and I'm being charitable, or at worst, it's just outright lies. and you know, we are confident that once people have the chance to now digest the published report, our response, that they will conclude that this has been actually a very malicious, timed, deliberate misrepresentations put out specifically to sabotage the FPO.
Okay, so the report is unsubstantiated and malicious. Got that. Any communication that you've had, Mr. Singh, with the SEBI? Have they asked for more data from the group?
No, we put our report out. Its report is reports gone to our websites, to SEBI, to regulators, to investors, to banks, to rating agencies. So it's a comprehensive response. You know, it's point by point response. So therefore, you know, a few hundred pages of response. So we expect that if there's question, people will take some days to go through hundreds of pages. But the thing that I would like to, if you indulge me for 5 seconds, I would like to highlight is that there is, you know, putatively, we were asked 88 questions. We answered all of them. 68 of those questions were subject to no research or any 2-year period. Somebody could have picked it up in 1 day because they are our own disclosure. Yeah. 7 questions were questions like asking, you know, what do you mean by growth with goodness? And that kind of rhetorical questions. So that becomes 75. 6 questions were related to already disclosed from a shareholder perspective. Like we disclosed in the wholesale offering open offer document, we disclosed our overseas holding structure fully. Before that is disclosed to SEBI. Then we have disclosed domestic service, those kind of questions. 6 questions are related to basically one of the family members as to how they run their private family office. Okay, now I can candidly share with you. I'm the senior most finance executive in Adani Group. I've been there for 11 years. In 11 years, I have not had a business or working meeting with Mr. Vinod Adani. The reason is very simple. He's not the executive in the business. And even I am not aware of how he manages his family offices or how, you know, XYZ manage their family office. It's completely separate. And many promoters in India have this. Their family offices are completely separate from their businesses. The same thing is here. So you put those 6 questions aside. Rest of the questions are a direct lift of our own disclosure and converted into misrepresentation and then put into the report.
All right, Mr. Singh, but will you, go the legal way, or do you think the disclosures that you've already put out will put to rest all the issues? What are you going to do?
Our first objective was to see, when somebody does this kind of stuff, we want to also give confidence that you are dealing with the new India. You are dealing with a properly regulated market with good institutions. Okay, first thing we establish is that the disclosure standards of Indian institutions and Indian corporates are high by this action. That is, nothing in that report comes from research, it comes from our disclosures. Secondly, documentary evidence we provide that they have misrepresented at best and misrepresented facts on top of it. So now the statement that you referred to is related to our legal counsel saying we will evaluate everything, and they are evaluating everything. So conclusion that legal review reaches, that will happen over some period of time. But prima facie, naturally, they want to pursue, and damage has occurred in India first and foremost. And people need to be brought to justice in India. Okay, we want people to face justice if there are issues in India. And but that would be a matter for our own legal advisors to pursue. We have handed them the same report that we've now put on websites. And therefore, our legal team has that, and they are pursuing everything. And we'll see what they conclude over the next coming months.
And we'll wait for that. Mr. Singh, the other issue which has been raised is debt, right? Could you tell us what is the aggregate gross debt across the Adani Group, listed, unlisted, I mean all companies? What's the aggregate gross debt? Not net, but gross debt. Go on, sir.
So the gross aggregate debt position in the group is just about 30 billion, of which $4 billion we hold in cash, approximately. Just under $4 billion we hold in cash. And the cash holding is required based on our statutory requirements, like DASRA's, some non-statutory discretionary requirements, like we have a policy to maintain, say, maintenance capex reserves, etc. And then the other one is that we also like to retain certain liquidity positions, which is that every company needs to have they calculate it like this, that for the next 12 months, what is your fixed commitments? And you must hold 1.25 times that fixed commitments in cash. So that's where they calculate, and so we about 4. So our net position of debt, net of our cash, which we can use, is $26 billion. Against that $26 billion, our EBITDA at portfolio level is 8 billion. So we are, give or take, just over 3 times debt to EBITDA at a group level, and that's the aggregate position. So on a coverage basis, our total debt service cover is just over 3 times.
I don't know if you mentioned that, but could you tell us how much of this debt is with the Indian banking system specifically?
Percentage approximately 23%. So approximately about from a total debt drawn basis that we have currently using out of our gross debt, we would have just over $6 billion to the domestic banking system. So 6 billion is what because the way the domestic banking system, there was some sanction limit. So if I just go that on the sanction basis, it will be about 9 billion, which we have not drawn yet.
Okay, so out of the $30 billion gross debt that you're sitting on, you're saying about $9 billion is the exposure that you have to the domestic banking system. Got that. And thank you for that clarification. Do you think that financing the overseas debt, this amount in terms of a rollover will now become costlier for you? You also have a very aggressive capex plan.
We don't have immediate maturities in that manner because our debt is long term. So about 50% of our debt is matched to underlying contracts. So we are limited maturity. Now the new borrowings which we have to do would be done on the asset based on the ratings. And you can have, like for example, what you're referring to is that can happen if there is a very limited set of investor pool. And then we have a very diversified investor set. So we have good set of 26 global banks, 9 domestic banks, domestic DCM, 144A issue, US private placement issue. We are one of the few Indian companies registered to issue debt in US. We are SEC registered. Okay, we have one of our companies gone through SEC audit, which is Adani Green. And so product-wise and separate gives us the flexibility. You can have investors fall out because of volatility issue. They might have their own internal criteria on such things. But our pool of investors is about 160. So the way when we do our issue, way it happens is that out of 160 investors on average, about 100 bid for our paper, out of which about 50 then subscribe. We might have some investors fall out, some new investors come in. So I don't expect the number of about 160 odd investors that look at our assets change. And if that remains, then we will pay what is the market price based on our ratings.
Well, Mr. Singh, the Ambuja Cement asset is a solid asset. It's got net cash and it's churning up a lot of cash as well. But the street wants to understand what is the level of pledging on Ambuja Cements. And just to clarify, did any shares get sold over the last few days?
The first thing is that 0% of Ambuja shares are pledged. Okay. We clarified that originally also. What happens is that when you acquire something via holding company structure, there we always give a standard covenant that we will hold X percentage of the asset underneath. That's how we designed the capital structure. So there we have said we will hold 63% of Ambuja. Now we are going to end up owning more of it because we've issued warrants and we'll we'll settle the warrants and we'll own more. But that's what we have confirmed. So they are concerned that what happens is that we simply say that we are not seller of our equity. We haven't sold anything. So it's no link to the share price. It's linked to the percentage of the underlying asset you hold, which is the same today also. It is independent of the share price. But now what happens is that under SEBI's regulation, SEBI just has a heavier regulation, which is a good regulation, which is simply that please report encumbrance. So and if we say that we will hold 63%, under SEBI's strict reading of it is considered encumbrance. So that gets misinterpreted and got misinterpreted as pledge. That is not the case.
Mr. Singh, any other pledging in any other group companies? Is there any pledge that got sold off in the last few days of volatility and sell-off that we've seen?
Absolutely nothing of that sort will happen at all, because at a promoter level, we are net lenders to the market.
Okay, now another issue which has been brought forth is about auditor pedigree, right? That Adani Enterprises is audited by a small, lesser-known firm. How are you planning to address this particular issue?
It will actually only take about 2 seconds for anybody at CNBC to confirm that this is a misrepresentation. So what they have said is that AEL's auditor is a small audit firm. The first thing, I don't like the word small audit firm because the person accusing of small firm is a small firm themselves. So that accusation itself is bizarre. But nevertheless, AEL is as incubator. So its key thing is how it is looking at its individual businesses. So for airport, for example, Mile Airport, auditor is Big Six. In mining, the auditor is Big Six. And anybody who has done any research, like I said, it will take 2 seconds to know this. So obviously they knew this. And yet they went ahead with misrepresentation. They could have said that we understand you have on the assets below, actual assets, you have Big Six. Why don't you have Big Six on AEL level? That's a legitimate question. But here it was not a legitimate question. It was not an issue of question. It was a hit job. And the hit job on AEL to sabotage the FPO. So intention was not to do it, intention was intentionally mislead. And so it became an issue. And then that's overall level. But then we have another policy also, which we would like to share with the viewers, which is that we have 9 listed companies, of which, barring one, all are Big Six. Then we have another policy, which is that from time to time we do last year we did a disclosure review. Now that disclosure review was done across all Adani branded companies, and that was done by Big Six. Then we do a spot review. So we picked, last year we picked in our risk program, it comes to me. And we picked hedging policy review. So in the hedging policy, and a Big Six accounting firm was appointed, and they said, please review all our hedging policies. So they do the review. So, and we do this on a periodic basis. So it's a very consistent. Then our audit committee is 100% independent. We are one of the few groups in India that have audit committees 100% independent. So there are a series of steps that we have for audit integrity. So it's a completely bogus misrepresentation, and it's like not misrepresentation. I think if somebody knows, it's not even a misrepresentation. If somebody knows, and you can verify in a few seconds, it is even more than misrepresentation. It's a deliberate misrepresentation.
Okay. Has there been any communication at all from the regulator on the FPI holdings in the Adani Group stocks, which was under scrutiny a while back?
No, we have a register we maintain. It's available whenever SEBI or regulator can ask. They can get it from us. That material non-disclosed material information, etc. So we comply with all of that stuff, but we have no specific to and fro on information that we possess, because our holdings are fully declared clearly, and then matters related in this current this made up report, we have shared our report with SEBI as well.
All right, Mr. Singh, need to ask you this question before we let you go. Ambuja Cements, there's a warrant conversion that is pending. What's the latest on this? Is this on track?
We continue to support that when the company needs within the requirements, and they will issue, we'll subscribe. For us, it's not we will not make any long-term decision on short-term volatility. They were a disaster for problems in the longer term. So because we fundamentally, that business is exactly the same, and its profile is exactly the same, and it will return to its profile, and it's doing well, and we are fully supportive of all of our businesses.
Okay, sir, thanks a lot for joining us and giving us all of those clarifications. Very important from a market standpoint. That's the Adani Group saying that the reports are completely unsubstantiated. Of course, a long interview will play through the course of the day. But the sum and substance is that the FPO will go through in its entirety as planned. And the total debt that they're currently sitting on is about $30 billion, out of which $6 billion is the exposure that they have to the banking system, and an additional $9 billion is the sanctions that they have. So a total of a little over 23% is the exposure that the Adani Group has to the Indian domestic banking system. Well, Hindenburg has come back with a response on the Adani Group's rebuttal, saying that the Adani Group has failed to specifically answer 62 out of the 88 questions that Hindenburg put forward to them. The core allegations of the report with respect to suspect transactions and offshore accounts are left unanswered by the Adani Group, and Adani's 413-page response included just 30 pages focused on issues with respect to Hindenburg's report. It also strikes Hindenburg as obvious that Vinod Adani is a related party to the Adani Group. No clarification was made to the group's relationship with Chang Chung Ling, despite many linkages that Hindenburg put on board. So this is the response that Hindenburg has put on the Adani Group after the rebuttal that came through. So there's definitely a lot of back and forth that has gone through. We'll get you more details on all of this through the course of the day. In case you missed out on that interview, we'll play excerpts of that over the course of the next couple of hours as well. For now, we have just about a few minutes before we head into the pre-opening session. So let's take a short commercial break. We'll come back with lots more on the market. Stay with us.
Welcome back. Hope you're having a good morning. Well, for starters, the SGX Nifty was suggesting a gap up of around 50 to around 60 points odd. But as the last 60 minutes have progressed, well, that's come down to more or less a flattish start, which is not such a bad thing. Flat is what the market will take. We don't want to see a big down day like we've seen the last couple of days. For the time being, though, we'll slip into a short break. You come back, Sudarshan Sukhani and Mitesh Thakkar will be waiting for us on the other side to talk about the technical markets. Later on, we'll also be joined by the management of Granules to discuss the past quarter's numbers.
Cashless hospitalization